We have a really good presentation today on reviewing your trading and some of the best practices and some of the things that we work on together at SMB to help traders develop. Now, it's going to be really interesting, actually, and we didn't necessarily intend it this way, but the perspectives that I present are going to be somewhat complementary to what Max presents. He's going to be talking a bit about monthly summaries and what I would call the bigger picture of trading. And I'm going to be talking more on the micro basis, day to day, some of which is based on how I actually coach myself in my own trading. So you see here, my name, Brett Steenbarger, and traderfeed.blogspot.com. That is my blog URL, and you can find my email address there, and you can find lots of articles about trading psychology and other good things, including reviewing trading. Okay, so let me get into how I structure a review. And three areas that I believe are crucial to reviewing trading, whether you are a longer term trader, a shorter term trader. The first is grading your ideas. Notice the word grading. You're giving yourself a grade. Ooh, that looks like good beer there in the picture. What do you think, Mike? So grading your ideas means you're evaluating the idea behind your trade. And notice with number two, grading that you're trading in the idea, I am separating out the idea generation. I'm separating out the quality of the idea from how I trade that idea. So the first question I'm asking in my review, and this is something I do end of day, every single day, was this the right idea? Did I trade an idea that genuinely had an edge behind it? Or perhaps did I get a bias during my trading? Was I unduly influenced by a particular flow in the market or a particular piece of news? Was this a trade with a genuine edge? And those of you who follow my blog know that I do some statistical studies to try to figure out where we might have some edges. But I also want to figure out if the market itself is behaving in a way that is consistent with that edge. So is this an idea that's truly playing out? Second, my grading of the trade based on that idea. How well did I enter? Did I enter with truly good risk reward, or did I end up chasing the trade and wind up with poor risk reward? How was my sizing of the position? Did I have a plan for not only sizing it appropriately, but maybe taking profits along the way? In many markets, I will take profits on a portion of the position and let a smaller part of the position run. How did I manage the position while it was on? And finally, the exit, I have certain exit criteria. When the market becomes short-term overbought or oversold, depending on whether I am long or short, I want to be taking those pieces off. I look at overbought and oversold on short time frames with a very short-term RSI and with the NYSE tick, the number of upticks versus downticks among all NYSE shares. And so I want to, if I'm long, if I'm going to be long, if my idea is to be long, then I want to be buying a downtick. I want to be buying when stocks are ticking down and when we are making a higher price low. As I mentioned on my site, every market consists of a linear component, a directional component, a trend, along with one or more cyclical elements. There are cycles in market, ups and downs, even in trending markets. If I'm long, I want to be buying the oversold spots at higher price lows. If I'm short, I want to be selling the bounces at lower price highs. And so I'll use the NYSE tick. I will use a short-term oscillator like the RSI to gauge where those higher lows are and lower highs. And that's part of grading my trading of the idea.
Can I jump in here with a quick example of some of the work that we do with one of the traders on the desk? So there's one particular trader on the desk who really wanted to short NIO, thought NIO was overbought, thought it was up way too much. And okay, that is up for whether or not that was a good idea or not. And one of the ways that we had the trader think about his trade was, is NIO going to be like maybe some other stocks that we would expect to completely give back all the gains it had made? Or is it a really, really strong stock that we're only expecting a pull-in for? And this trader also structured the trade in a very solid way where he didn't feel a lot of heat on the particular trade because he used options and stock to make sure that he limited his downside if he was a little bit too early. But the trader didn't just go out and short NIO. The trader expressed his trade in a way that kept him inside of his guardrails for his risk. And then we helped him judge the trade based on it really being more of a pull-in trade as opposed to something that we expect to go all the way back to where it came from. And we're continually doing that. And so then we have that work on NIO, and we can compare that to another really big trade that we saw in JKS, where the trader perhaps got in front of something that you shouldn't expect necessarily to pull in as much as some other stocks. And then finally, we have probably our highest P&L trader had trouble pulling the trigger on his trades. But we said, hey, you're really terrific at developing ideas. You're terrific at that. When you develop ideas by yourself, we have a lot of confidence as a firm that you should go ahead and make those trades. And we could point to lots of trades in the past where he did that and made a lot of money. And so he could have more confidence in being able to make those trades. But it's this foundation you're laying right here, Dr. Steenbarger, for guys to be able to work off of so that they can get better and do more of their best trading. Anyway, I just wanted to jump in with that.
Yeah, great examples. And so I'm grading my ideas, I'm grading my trading of the ideas, but I'm also grading myself. How well prepared was I for the trading day? And that personal preparation includes time spent in the morning pre-market for exercise, physical exercise, reviewing markets, reviewing the previous day's trading. I have a number of steps, a number of activities that go into my preparation because I know I'm going to be more focused. I know I'm going to be more alert and prepared if I do those things. So every single day, I'm getting at least 3 grades for the quality of the ideas that day, for the trading of those ideas, and for my preparation. And if the ideas or the preparation fall short, then I've got some things to work on. Now, what I mentioned in the slide is to review, you have to review. This is really key. I review every single trade I make, but I review it. I literally replay the charts. I have all my screens up and all my different indicators, and I go bar by bar by bar by bar, and I relive the entire trade, and I'm evaluating the idea, I'm evaluating the execution, I'm evaluating quality of what I did.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
From that review, that very detailed review, I want to identify, one, what did I do well? Where did I really make some good decisions? And how can I make sure that I'll do those same things again tomorrow? What specifically could I have improved? I had a great entry on a trade today. It was really good. It was a long entry in the morning. And then I completely effed up the exit. And it ended up, I definitely should have taken profits earlier. It went against me. And I ended up making some money, but not nearly what I should have. And so right away, what specifically could I have improved? I'm going bar by bar by bar. And how could I have exited better? And that's what I've learned today that I will bring tomorrow, that I will, and then I'll figure out how will I implement it tomorrow? How will I do my exits better? So every single day is becoming a learning experience. This is something I've written about recently on my blog and in a Forbes article. What state are you in when you are reviewing your trade? You want to be focused because we process information more deeply when we're focused, but we also want to process with emotion. When I'm going over bar by bar by bar by bar, it is not a bloodless clinical process. I am focused in and I'm getting excited about what I'm seeing and what I could do better. And that excitement, that enthusiasm is part of what sears the learning into my head. Our reviewing of our trading is essential for deliberate practice. Deliberate practice in the research literature and psychology is what builds expertise. We perform, we evaluate performance, we make adjustments, we perform again, we make new adjustments. And so that the quality of our reviewing determines the quality of our deliberate practice, and that ultimately determines our learning. That can become an everyday experience that helps us move forward, so that we always have a positive learning P&L, even on days where the financial P&L may not be so positive.
So I'm just going to speak about basically what are the 4 key pillars of my monthly review. So when going through my monthly review, I'll basically try to outline like the broader points. First, it will be the overview of the month. So for this point, this means besides just like what was the actual result in terms of a P&L, how was I executing on my trades, and then also what was my mental state throughout the month. Was I in the right mindset, and if not, why, and if yes, what can I do to build on that? Next is going to be actually more trade specific. So I'll be going through my best and worst setups. This means just like which stocks or which actual trade setups. And then the next part for me is going to be reflecting on goals for the month. So what were my goals incomingly for the month? Why did I achieve them? If not, why? Was the market environment proper for me reaching my goals? And then lastly will be my goals for the following month. So now just expanding on each one of these points. So for the first one, it's going to be the overview of the month. So for the most part, I'll just lay out maybe a few large paragraphs and going through first, what was the P&L and whether or not this actually hit my target. Usually what I'll do is I will have multiple profit targets based on the market environment. So for example, if let's say the market environment was absolutely perfect for me, what was my profit target for that month? If not, then what was the target for that month? So for example, October for me was not a month where the market environment was that clean. I overall did not really get a good feel for the trend. So I especially had a profit target for that style month. Whereas let's say for more of a June or September month where the overall market climate for me set up well, then obviously my profit target for that kind of month would be a lot more aggressive. Next is going to be, analyzing like the market environment, but also trying to dissect what kinds of setups work during that month. Like, what sorts of stuff could I be changing? What like new style of trading? Like, should I be focusing more on scalping, on micro time frames, or should I be focused more on building into larger trades? So, going back to, let's say, a June month where there was so much volatility and liquidity, that's a month where you can look back and say, okay, like this was a month where you can really create something special by just scalping because there was so much intraday opportunity. But now if let's say for a month like August, where it was a much slower environment, but tech just kind of slowly grinded up throughout the month and then sort of went parabolic, you can look back and say that was more a month for building positions, right? So what sort of a market environment works best for you will also dictate what your profit target should be for that month. So then just like the last part is going to be the psychology grade, basically just like going over what was my like mindset throughout the month, and was I in the right mental state to put on risk? If not, why was that? Was I being more cautious for a certain reason? Did I lose my sense of edge for some reason? Why was that? Was it smart? Was it, it's something that I have to reflect on and then grow from and try and be actively making adjustments the following month. So now just kind of diving deeper into the actual trading part of the monthly review. The first step for me is to identify the best and worst just like style symbols. So for me, like that will break down into either large cap names like your Apples, your Tesla, your tech stocks. The next part is going to be in low float style trading, and then even more from that, besides just like breaking down like the style symbol or the market cap, also the liquidity. Because there are many large cap names where the liquidity on an intraday basis is not too great. Do you trade those better? Do you trade those worse? There are also names like, for example, a name like NEO, where it's super liquid, and you find that it's possible that you are having trouble trading those style names. So being able to go back and reflect on the actual symbols that are best will allow you to better game plan for future trades. Next is time of day, and this was actually a very big one for me early on in my trading career, where I noticed that I was giving back a lot of P&L from the 11 o'clock to 2 p.m. hours, so the midday session, which is quite common for many traders. But being able to visualize this and see exactly the times that I'm doing poorly in is a sign to me that I should be either one, risking down, or two, just stop trading then, unless there's a very specific scenario that would warrant me trading. So for example, right now I'll be barely trading during the midday session unless there was some sort of a breaking news event or something where there was a volume explosion such that the action in the midday session is not your typical midday, but rather almost trading like a opening drive or the first like 90 minutes. And then the last step would be to then select those specific setups. So were you really good at trading opening drives, but you were poor at trading candlestick breakouts? Were you really solid at putting on overnight positions, or were you not? And being able to clearly go through that list and then be able to identify which symbols or which setups you should be sizing up on and which you should be sizing down on is going to be critical for you taking your trading game to the next level. One thing for me that I found was that over the last like 6 weeks or so, the overnight positions have been more profitable for me. So seeing that and visualizing that through my review, I'm able now to size those up with confidence if it meets the right bullet points for the trade. Whereas I've seen that some of the more intraday setups that worked for me in the past are now a lot less consistent. And seeing that, now I know that I should be sizing down on those trades until I regain the same consistency that was present, a few months ago. Next is going to be reflecting on goals for the month. So we already spoke about profit goals, but there's also psychological goals, right? So, for example, maybe you wanted to set a goal for a certain mindset that when you're trading down, you wanted to be more responsible. You wanted to stop yourself when you started to see yourself spiral, or maybe you wanted to push yourself more when you were trading up. You said that you found yourself kind of a little bit hesitant to put on risk when doing well, whereas like you feel that that's like the next thing that you need to accomplish to take your trading to the next level. Being able to go back and reflect on this is extremely important. And then also personal goals as well. Besides like your actual trading life, that you also should have goals for your personal life as well, because obviously what goes on in your personal life is going to impact what's going on in your trading life. So this can go from what are your social goals, what are your fitness goals. All this will matter, so that way you're in the right state of mind for when you come to the office and trade. And then the next point is, how did your overall process in your trading improve or worsen? Did you find that your game planning got better? Did you find that the way that you were talking through with your team was what you set out to do? Do you find that maybe like you're not speaking with enough traders and that's harming your performance? Going through all those points will allow you to improve your process, and it's ultimately going to be that process that is going to dictate what that profit is at the end of the month. And then lastly, which moments in the month were pivotal in regards to your goal. There's going to be probably 2 or 3 days in the month that are going to set the tone for the month. Like those are going to be the days that you really have to execute on, so that way you reach your goals for the month. Did you or did you not, and why? There were specifically certain points last month where I recognized that I did execute on those goals, and when I didn't, and being able to go back to those key moments, that way the next time that those same moments pop up, you do the right thing, or you even double down on doing the right thing, is going to be critical for you achieving your goals for the following month. And then as far as goals for the following month, just kind of adding on to the last slide, is what is it going to take for you to push your trading to the next level? It's not going to be enough for you just to set a goal for how much you want to make or what setups that you want to do. What is that barrier that's stopping you from becoming the next incredible trader? And everyone has those barriers, and now it's the time to look back and say, what is the thing that I could really improve on, that if I do, that's gonna take my trading to the next level. And then next, what obstacles lie in your way? I would say that if there are certain psychological obstacles while trading that lie on your way, or those are probably the ones, I'm sure that Dr. S would agree, are the key to fixing, because trading is mainly mindset. I think that any trader would say that. So once you fix that, if you have your process in order, then it should be a lot easier for you to swiftly accomplish those goals. And then identify the parts of your life outside trading, which speaks to the personal goals, because I promise you that if you accomplish certain goals that you set out in your outside your life, then your mind will be that much clearer. you'll sleep that much better, and you'll probably execute on your trading goals that much easier. And I'm just going to go to a few excerpts from my monthly review, just to illustrate a few of the points. This speaks to the top setup slide. So basically identifying clearly that my best trades were scalping and using my tape reading skills. So now what is now my next goal, right? Is to use what I was best at to try and improve on another part of my game. Could I use those scalping skills and tape reading skills to now size up and build into a more swing position? And this will allow me to take one of my strengths to then apply that to try to maybe reach or to surpass that barrier that is stopping me from, let's say, being an even better trader. And then what were my bottom plays? Identifying what were the worst setups should tell me the stuff that I should be focusing less on, and then what stuff should I be sizing down. There's no point in me giving back half my day on trades that aren't really setting up for me, and being able to clearly identify that will probably help you reach that profit target that much easier. The next point here is going to be a reflection on goals, right? So for me, if let's say right now I'm looking to risk 7 to 10% of my stop on some of my bigger picture ideas. If I can go back and identify what were the setups, what did the tape look like, how could I have potentially risked 20%, and then trying to accomplish the goal of, let's say, bigger picture trades, could I have held risk for longer and then possibly use those tapering skills to actually stay in that position? So being able to clearly identify what are those key steps that you can take that following month, and this can also speak to your execution style. So one thing that I did pretty early on in my career was always set out to basically offer out risks. So if I sell half of a position at a 1R profit target, this means that at worst that the trade is flat. And then I found that for my own trading, that anytime that I did that, I would be trading the position in a much smarter way, a much more controlled way. My psychology was better. So realizing that, I made that a clear goal of mine, and that's one of the first steps to building consistency, is making sure that you are putting yourself in a position where you feel confident and calm and in full control in your trades, so that way you are managing it properly. And then this slide will speak to goals for the next month. This was especially the case for coming from an environment where SPY was, let's say, moving 3-4% a day, to then moving 2% a day, to now some days a intraday range of only 0.5%, right? Is to be ready for the market volatility to die out, which for me would be kind of a change in what I'm used to seeing. So being able to map out and mentally prep yourself for those moments will then allow you to not be totally shocked, and then be able to adjust more so in the moment. So for me, that was one of my main goals. The next thing was more of a psychological goal. It was that with the increase in my stop, I have to mentally accept seeing larger losses at times as well, and to make sure that seeing those did not push me to then spiral to try to make it back, because I feel so anxious seeing those losses, and then possibly creating something worse. So mentally setting myself up to the point where I accept that everyone has losses, and that at some point there will be some drawdown that will seem big, and then I still have to maintain the right process and the right mindset, so that way I'm successful in the long run. And then lastly, something that I think that is critical for everyone is really just kind of taking everything one day at a time. Even when things are going really well, if you start thinking in these grandiose terms, then you're more likely to end up making a big mistake. But especially with day trading, the beauty is that you can just kind of come in every day if you want flat, and then just manage like the day properly. And especially in times where you are drawing down, like, you would be surprised how just one green day could just change everything for you, and it can totally shift your mindset. It can kind of ease the burden, and then from that point on, just sticking to one day at a time is something that could potentially allow you to get out of the drawdown a lot quicker than you expect.
Hey Max, if I could just cut in here. So one of the questions that I get asked frequently, and I'm sure Dr. Steenberger, you asked this question as well, is we get a question to our inbox from a very ambitious retail trader or independent trader. And the question goes along the lines of, I feel like I'm breaking through, but I'm not quite there. Can you help me? Can you tell me the thing that I need to do that's going to help me get to where I want to get? And the things that we do at our firm are the way for people to get better. So when that person reaches out to me who wants to do better and asks how I can help them to do better, almost always they don't do the work that you've just done. So very clearly, we are tagging and measuring all of our trades. So Max can tell you what his stats are on breaking news trades, on VWAP trades, on overnight trades. They all have names, they all have stats. He's keeping track of all of them. So when he comes to Dr. Steenberg or myself and our floor manager and his team at the end of the month to do his review, and he wants to get better. He's very ambitious. He wants to be the next Shark, or be the next Swang, or be the next Wilgus, or be the next Dan G, or be the next Raf. Right, Max? You're that's
absolutely.
We don't, of course, and that's great. That's one of the huge advantages of being at a prop firm is you see those people walk the same halls that you do. And if you are competitive in any way at all, you've got to be thinking to yourself, I can be like that guy. And so, but that work is, we are looking at your stats, what you do well. We're looking at your stats, what you do poorly. And we're crafting a plan for the next month as to how you can trade your good trades a little bit bigger and more often, and how you can eliminate your weaker trades from your trading, and maybe some research you can spend a little bit of time on to add to be a little bit broader with your overall goals. And then all of that goes into exactly what you're talking about. It goes into you crafting your daily routine of best practices that are effective that can get you to that. For example, maybe you're being impulsive and you need to eliminate that. We may need to look into your sleeping. We may need to measure your sleeping. We may need to get you some mindfulness practice. We need to make sure that you're eating right through the day. So happy to get those emails from the next great trader on the street about how they can do better and what it's going to take. But my answer is going to be, we got to do this work first to have any idea of what it's going to take.
Hey, Mike, can I jump in? We've got 5 minutes left. I just wanted to add one perception. The odds of a trader being successful, I have seen directly related to the quality and detail of their reviews. The more thorough and detailed the review, the greater the learning process, the greater the odds of success.
All right, so do you have any go-to statistical measurements that help assess trading performance over a specific time period?
There's a few stats on TraderView that I will be looking at. One is going to be K ratio, which is the ratio of your wins to losses, and just kind of tracking that. Similar to that will also be MFE to MAE, which is basically tracking what is the average that or what is your average winning position at the greatest point, and then what is your average losing position. And that one is specifically important because it's telling you how much heat are you taking on your trades, which is information for you possibly seeing at what point should you start closing out your losers. So for example, if you see that your average winners are 2-1, right, and you start seeing that you're probably drawing down a little bit too much for that ratio, that's probably telling you that it's going to be a losing position, and you should be trying to find a way to close that out at a favorable price, possibly a break even or just a smaller loss, because it's not acting in the way that your winners will usually behave. And then besides that, whatever a measure is basically just explain to you what is the odds of success. So going through the time of day, win percentage, all that kind of stuff is also extremely critical.
Thank you. And next question. For a beginner trader, are there a max number of trades that you should be taking each day? It seems like I get lost when I have a large number of trades to review for a day, week, or month.
Yeah, so I would say that like the max number depends on the person. I think that all goes on your personality. So for someone like me who really started out in a scalping mindset, I would take 50, 75 trades per day, but they're all small trades, and it was just the way that I felt most comfortable. I wasn't comfortable at first being in a position for more than 5, 10, 15 minutes. That just was not my style. Whereas for some traders, they're best at building a trade, one or two trade ideas for the day, being wider, and then anything more is just too much noise for them. So I think really just like figuring out what you are mentally comfortable with and what your stats say is successful, that you should go with. If you find that you're being overwhelmed, then just cut that down. I mean, like right there, your psychological feedback is sort of giving you the answer for what works, because it doesn't matter what works for me for your trading. It only matters what works for you for your trading.
Let me add just some context to that. So at SMB, we trade what we call a stocks and play system. That's the system that we teach to our traders. That means they're looking for stocks that have a news catalyst or a technical catalyst. That's where they spend their time. We ask them when they first start to start with 4 stocks from the SMB stocks and play system. And then only after they show prowess, being able to trade those 4 stocks consistently, and they move around each day depending on what's in play, do they trade more than that? You want to do well at a small number, and then and only then bump that number up.
Thank you. How do you grade ideas in execution? Do you assign a number?
So for me, the biggest checklist for me is RVOL, especially because we're all trading stocks in play. RVOL, which tells you the relative volume, will tell you how active is that symbol that day. And especially for me, trying to do more scalping trades, a name that is doing more volume and more active will be more liquid, and therefore I'm probably going to be more successful trading that symbol than if, let's say, the RVOL was low and there wasn't that much liquidity. So that's check one. Where is it on the chart? Is it doing RVOL but it's in the middle of a 6-month range? The odds that I'm going to get that clean breakout trade or breakdown is slim. Whereas if, let's say, we just broke all-time highs on 5 RVOL and the stock is a crazy liquid, that to me is setting up to be a plus symbol, where now I should look for my A+ setups.
If I could just jump in here, Max used a great word, checklist. I think different traders have different items that go into their checklist as far as what makes a good trade. But if you have a checklist, A, B, C, D, this is what I look for to have an advantage in the marketplace, then that's what you base your grade on. If you have made decisions based on all those criteria, that's an A trade, even if that particular trade didn't happen to be profitable on that occasion.
Thank you. Is there a template or form available to keep track of our trading?
So for me personally, I'll use a TraderView, which I believe that anyone could create a account with. So that create or that tracks like my stats. As far as the actual trades, like you can definitely create that on your own. Basically, just like outline, let's say, a spreadsheet that where you keep track of of the symbols that you thought met your checklist point A, right? And then like, what was like the setup, and did that work? And then go back through that in a weekly review and see for those symbols where you believe that it met your checklist for those A plus trades, right? Did those work? And then constantly, evolve with that process until you keep refining what are your A plus trades, and just kind of going down with that review process. But as far as a strict template, I think that will just vary based, on the trader.
Thanks, guys. We have time for one more question here. How do you determine how big your trade position should be?
So for me especially, I would say that it's going to be a comfort level for the setup and for the degree of confidence. If let's say I am extremely confident and I feel
Come on, Max. I hear you badgering Carlton to give you more risk pretty much daily.
That is true. That is true. Every Friday, I run over around 12 o'clock and run over and beg for more risk, basically. But yeah, yeah. So, in all seriousness, I would say that for those high confidence trades, if let's say I'm risking to what is like, let's say like the proper stop for this bigger trade idea, I will feel a lot more confident that I can risk a bigger portion of my stop, because like the odds of, let's say, some like market inefficiency or someone like removing a certain bid or offer that ruins a certain tape trade is not going to be as likely, and therefore I can feel confident that if I'm wrong, I was really wrong, rather than, let's say, just being like wicked out. So for me, like that's how I will assess risk on those style trades. But the real answer also is that it should go based on what you internally feel confident in. Every trader will say that if like once you enter the trade, that you feel extremely nervous, it's too much risk. If you thought that like the risk to the right stop was 20% of your daily stop, and then once you buy it, that you start sweating, obviously that was like too much risk. And that's like the feedback mechanism for you to size down that trade, at least until you build up more confidence, and then you are mentally in the game while that position is on.
For independent traders and for retail traders, the first step is to be consistent. You want to be consistently profitable first. And then from that point, you worry about sizing up. So, and then after you're consistently profitable and you have some experience, you can really do a lot of good damage in the marketplace. Last week, we had a huge trading opportunity in one of the stocks, and our top traders asked for 50% more risk. In one case, 100% more risk, because they identified a special trading opportunity. And this one particular person was given tons of extra risk because this was a special trading opportunity. But this is a consistent trader. This is somebody who this year is up over $10 million in net trading profits. This is an experienced trader. And in fact, given that extra risk, the trader went on to make over $1 million in the particular trade. But that's after being consistent and good and understanding what their strengths are and getting bigger over time.
One last quick thought. I totally agree, Mike. The consistency comes first. Max, you said something very important. You're always risking a portion of your daily loss limit. Everyone should have a loss limit based on the size of their account so that they don't lose too much of their capital. And what you're risking per trade is a fraction of that daily loss limit.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.